If you're new to trading, everyone probably told you, use a stop loss. But what if I told you I don't use one? I've lost millions in a day. I've also made them back. What I've learned is that setting a stop loss isn't always the answer. In this video, I'll show you what to do instead. Most people use a stop loss because they don't trust themselves. I don't deny that stop losses are important with long-term investing, but when it comes to day trading options, it's a sure way to bleed out your account. Most traders size too big and end up setting tight stops, which can cause your account to never grow in the long run. Instead, remove the temptation. Size down so you can survive being wrong.
I'm going to give you a visual example of looking at a trade while not using any stop losses. Like I said earlier, the reason why you don't use a stop loss trading weekly options is to, number one, remove the emotion out of the trade, and so you never get caught off guard.
If you're emotional about a trade, you're in too heavy. The less emotion I feel, the better I trade. The reason most people panic sell is because they can't sit with discomfort. Holding losing positions has more value than you think. You need to train yourself to feel every emotion while trading. This is what will set you up for success in the future. Holding a losing trade can make you feel frustrated, anxious, and mad. You need to experience these feelings and deal with them in a constructive way in order to be in control in the future.
This right here is a chart of MSTR, and this 342 range right here has been a difficult level to get through. The last time it got there, it dropped from 342 all the way down to 236. Yes, you could have bought for that triple bottom of 236.
Red days aren't always a sign to run, they're data points. Losing is a part of winning. Red days have massive value if you know what to look for. Without mistakes, you can't get better. When you do have red days, study these trades to help you avoid making the same mistakes in the future. This will drastically improve your P&L by the end of the year. Look at your entry and exit stamps. Ask yourself the reason why you entered the trade, and most importantly, ask yourself this question: would you take this trade 90% of the time? If the answer is no, don't ever take that trade again. You need to journal how you feel in a drawdown and learn your triggers. There's a certain number that is painful for everyone. You need to make sure you stay under this loss amount on a daily and weekly basis. Otherwise, you're gonna end up chasing your losses and blowing up your account. I've been down $1 million in a day, and when this occurred, it actually made me feel sick to my stomach. I work hard for what I have, and it takes a lot of patience to wait for high probability trades. Seeing a 7-figure loss in a day is tough, but I always tell myself, if you want to keep leveling up, you need to learn these big lessons. Big lessons can equal big profits in the future. People want stop losses to protect them from themselves, but what protects you is a process. You have to ask yourself, what is your risk tolerance? The answer is unique to every trader. Only you know what your true risk is and what you're willing to lose per trade. You need to be honest with yourself and always size for what you're actually willing to lose. It's gonna help you be more objective and have a clear mind while in a trade. Next is your entry. Do you know where or why you're gonna enter a trade? Make sure you understand the key support and resistance levels in order to find the prime entries for each trade. This will help you with consistency and being in the right trades more times than not. And next is the exit. This needs to be established before you enter a trade. Be honest with yourself and stick to your word. Most traders enter a trade and have no idea when or where to sell. Don't be greedy and make sure you sell when you're satisfied with the profit. For me, I size for 0. The second I click buy, I'm prepared for every scenario. The position can go to 0 the minute after I enter, I'm okay with that. If the position goes up 300%, I'm also fine with that too. When you size for 0, you remove all of the emotion out of the trade. But why is this important? Because emotions are a liability when it comes to day trading. You remove the emotion equals more profit.
But if you waited for MSTR to get back up to 342 right here on April 22nd, that was when Bitcoin moved from 87,000 to 93. And we know 85 is a big level to reclaim. Once Bitcoin reclaimed that and MSTR got back to 342, this set it up from a move from 342 all the way back above 400, got all the way up to 430.
I'm not telling you to never use a stop loss. I'm telling you to know why you are. Most people lose because they never slow down enough to learn. A weekly routine to review your trades is absolutely imperative to becoming a better trader. Everyone should have a journal where they mark the entries and exits and the reason for the trade. Keep it simple. You don't need 10 different categories. Study why and where you entered and exited each trade. Study your trading patterns. There's a certain time of day you always perform best in. If you study your trades, you'll know this information. Try your best to stay in that window of time each week. Rate your trades not just by profit, but by execution and discipline. If you stick to your system and the trade doesn't work, it doesn't necessarily mean it was a bad trade. Systems don't work every time, but if you have the consistency to stick to your trading rules and execute your plan, that's what matters most. Most people can profit on a trade and build on the completely flawed fundamentals that can blow up an account later down the road. Make your losses productive, study them.
So being able to catch that move, right, from 342 all the way to 430, yes, in theory, you could catch it. But if you don't size for zero, especially trading weekly or 2 weeks out for trading options, you can easily get stopped out when MSTR took a dip on one of these days on the way up. When you size for zero, you remove the emotion out and you're being honest with your true risk. Once you are able to do that, then you'll be able to catch the whole entire move. And being able to catch 60 points all the way up to 400 or beyond that can be a big win when you're trading options. Just remember that. Understanding the level is important, but sizing for zero is what's going to keep you in the trade.
You don't need a stop loss to be disciplined. You need clarity and you need conviction. You need a system that works when things go right and when they go wrong. The market doesn't care about how you feel, so build a system that doesn't either. If this gave you clarity, hit the link below. My group is built for traders who want to think differently. No hard sells, just truth.